What's happening, guys? Welcome back. I thought I would do a video today on the best time to trade. Now, just before I go into this, I want to let you know that there's not going to be a big secret that you're going to learn here today. There are a few variables that you'll have to think about as a trader. And if you're planning to take your trading to a new level in terms of becoming consistent and profitable, then I think this question needs to be addressed and it needs to be understood fully. So without further ado, let's get into the session, and I'll break down a few things that you can think about as you move forward in your trading. Now, the biggest questions that I hear a lot on a daily basis is, what are the best times to trade? What sessions are more likely to move faster than others? Where is the momentum at? Where is the peakest time that most traders are going to be trading? Can I trade with the bank? Can I trade with the institutional traders? All those questions are asked on a daily basis. Now, I'll go into more details in a minute, but what you have to understand is that the market moves 24/5 in a way, and we're never going to know when is the best time to trade. That's the honest answer. There are variables that we can look at to identify momentum shifts, structural changes, and when the market looks likely to move. But to know exactly when, I don't think we'll ever know that answer, to be honest with you. I also get asked, do we know when the candles are going to close? Should I wait for them to close? Should I wait for them to open? Well, again, that's something we're going to go into in a bit more detail in a minute. And should I trade the London Open? Well, I don't know, to be honest with you. If you're up at London Open and there's a tradable opportunity, then by all means go for it. But if there's not a tradable opportunity, then me saying yes to that answer is really not going to help you. So there's a few things that you really need to understand as a trader. And it's very important that you do understand this. The strategy that you use is going to play a big part in which times you plan to trade the market. Some people scout, so they don't necessarily need the candles to close. They can jump onto the lower time frames and look for areas on the market where they think they find their key levels. They see their breakouts, they see their retests, or whatever it is they're looking for, patterns that they're trying to find. They can take the trade whenever. Then you have swing traders who may only be looking to trade at the end of the day when the daily candle has closed, looking to see how the market has reacted during that period of day. Has it come back to a key level? Is there a tradable opportunity? Is there a pattern that is part of my plan that I can take? It also boils down to the type of person that you are as a trader. Some people are able to go into the markets, look at the markets clearly, identify tradable opportunities and take the trade. Others go into the markets and confuse their analysis by overcomplicating their analysis and then hindering their possible opportunities to enter the trade. Now, the slight difference in timing can make a huge difference in your trading opportunity, because somebody who's able to identify a trading opportunity immediately, as opposed to somebody that has to go into a lot more detail in terms of scaling down to their lower time frames, drawing their levels, really fully understanding what they're doing, could mean the difference in a huge stop loss and a huge target, as opposed to somebody that can identify and forecast that move happening and then deciding to get into the market. You also have to understand that the variables surrounding your strategy and the person that you are, and then you have to ask yourself, does a strategy that I'm trading realistically fall in line with the lifestyle that I'm living? Some people are working 9 to 5s, others are working through the night. You're not going to be able to get into every single position in every single session. You're going to get tired, the markets are going to defeat you, and you're going to start becoming emotionally drained, psychologically drained, and then it just becomes a battle of who's right, who's wrong. Can I make this amount in this X amount of time? And that's not where you want to get to as a trader. So you have to figure out, does what I'm doing right now in terms of my trading fit with my lifestyle? And obviously the most important question that surrounds all of this is, do you have time to trade? So we don't have the answer that everybody's looking for in terms of, well, what is the perfect time to trade? These are things that you have to think about before you decide to trade. Are you working? Do you have time to trade? Does the strategy that you're trading fit your lifestyle? Does it fit your personality, your characteristics? These are things you have to think about. So there's 3 types of traders. We have swing traders, we have intraday traders or day traders, and we have scalpers. We have positional traders and a few others, but these are the 3 main traders that most people trade. Now, you have to ask yourself, which one am I? And that is the biggest question that I would ask yourself first before you try to find the answer as to what is the best time to trade. Me personally, I'm an intraday trader and I can trade around the clock because I trade based on structure. So if there's not a tradable opportunity, let's say at London Open or at the New York session, then all I'm simply waiting for is for my 4-hour candles to close and for the market to create structure that I recognize as patterns I trade. Now, sometimes it happens at London Open, sometimes at New York Open, sometimes a close at New York session. It just all varies. To me, what I don't want to do is emphasize a specific time in my agenda, because then I automatically feel forced that I have to take a trade at that period of time. And that's something that you want to try to avoid as a trader. If you feel that you have to jump into the markets at a certain time because that's the time you set, what you will find is that it's going to backfire on you, because then the expectancy to take that trade is always going to be there the minute you see a pin bar, an engulfing candle, or what looks to be like a tradable opportunity. You're going to take it. Once you take that trade, win or lose, more often than not, if you don't get the results you're looking for, you're going to step away from that chart and you're going to say to yourself, well, hold on a minute, this is not a tradable opportunity. Maybe I shouldn't have rushed into it. So try to avoid setting a specific time to trade, because you're going to feel forced eventually to take those trades at that time. So figure out, are you a scalper? Are you a day trader? Are you an intraday trader? Figure that out in terms of your lifestyle. Figure out if you can fit it around your work, fit it around your families, whatever leisure that you do outside of trading. See if everything lines up and the variables match up for you, because if they don't, you're going to struggle. So a swing trader will normally hold a trade for, let's say, 1 to 4 weeks. He's looking to hold a trade and take advantage of a swing in the market, looking to ride the market down to positional levels of support and resistance where price action has reacted to the most or looks to be a major key level. More often than not, they use technicals in their analysis, so fundamentals is not really a key factor, but some swing traders do use fundamentals to help them in holding their positions and reaching their targets. The only issue that a swing trader may face, as opposed to a day trader or intraday trader, is that he's going to be holding his trades overnight. That opens a risk of being affected by fundamentals and news, events that are outside their control, swaps, spreads, and much, much more. Now, that doesn't mean that swing trading is not a good way to trade the markets. Again, it's going to suit somebody who has more of a calmer personality, who may be a lot busier than somebody who's able to sit on their charts, or maybe somebody who doesn't want to be sitting on their charts because they fear that they're going to overtrade. They prefer to use this as leverage to build smaller accounts, because technically that's what you can do as a swing trader. You can risk a percent to gain a lot more over a longer period of time. The only key factor to a swing trader that's different to an intraday trader or a scalper is that their patience game needs to be on top. So if that's the type of person you are, let's see what times of day you will be trading. So generally, a swing trader would use the monthly or the weekly time frame to look for their key levels in the market. Now, they may be looking for levels of support and resistance, swing highs, swing lows, and even looking to take break and retest opportunities. More often than not, they're looking to get in high and get in low so they can take advantage of the whole position. Now, they don't need to be meticulous with their entries, because technically their stop loss is always going to be a safe haven for them. It's going to be much larger than an intraday trader. So they're going to be using structure to their advantage, which means that they may push their stop loss a lot bigger than what we would use as an intraday trader. So looking for pin bars, engulfing candles may not be a key factor in terms of their entries. They may be looking for maybe pullbacks in the market to tighten up their stop loss, or technically increase their stop loss size and then obviously go for huger moves in the market, which could last anything up to a week, 4 weeks, and sometimes even up to 3 months. The good thing about a swing trader is that they don't need to be on their charts as often. As a swing trader, if you're able to take 1 to 3 good trades a month with a very good risk reward ratio of about 1 to 5, 1 to 6, even 1 to 10, then in terms of your risk to reward and your percentage risk and your percentage gain, you're doing pretty well as a trader. Now, not all of them are going to win, but of course, as a swing trader, what you have to understand is that your length of time in the markets in terms of seeing your rewards is going to be a lot longer than those that are taking trades on a daily basis or even taking multiple trades on a daily basis. So you just have to be a little bit more patient. They don't need fundamentals as much as, let's say, a positional trader, because they're not going for the largest of moves. They're probably just looking to take advantage of a nice swing in the market. Once they get that swing, they're looking to take their profits or at least trail their stops. So now we know a little bit more about a swing trader. What is the best time to trade for them? Well, more often than not, a swing trader is going to be looking to start their trading at the start of any new candle. So more often than not, you're going to be looking to use the monthly candle, the weekly candle, and the daily candles. Now, there's something called end of day trading. So more than likely, you're going to wait till the end of the day to come home from work, to wait for that candle to close to see how price starts to react at a key level in the market. Usually that's the best time to trade as a swing trader. Some may be able to get into the markets a lot easier than others, and they might like to use the 4H time frame. Personally, that's my favorite time frame, and I can use the 4H time frame to swing if I want and to use it as intraday. Why is the 4H good? Well, if you're looking for price to break below and close structures or above, it's a good candle to look for because it's strong, it's not as noisy as the 1 hour 30 minutes, and it really does balance out well with the daily. You then have traders who are waiting for pullbacks to key levels to see if the 4H candle closes. And the reason why this is good, if you get a rejection, to enter as a swing trade on the 4H is because you're going to have a much smaller stop loss than you would using a daily time frame. So, as a swing trader, when's the best time to trade? Well, in my honest opinion, I would say at the end of the daily candle close, or you're looking to trade around the first 12 hours of the daily candle, monitoring the 4H candles. So you're looking at 3 of them in the first 12 hours of that daily candle. Why? You want to be able to take advantage of the whole move of that candle. You don't want to be taking advantage of that if that move has already happened. You're going to open yourself up to pullbacks and much, much more. So that's just my opinion as a swing trader. If you don't agree or you do agree, drop a comment below and let me know. The next trader we'll take a look at are day traders. Now, what are day traders? So usually a day trader is going to be holding their trades for around 24 hours max, if anything less. They usually don't hold their trades overnight. They want to avoid the unexpectancy of news, and they also want to try and avoid the spreads and commissions that they may have to pay, swaps that they have to pay overnight. A lot of day traders and intraday traders usually take around 1 to 3 trades a day to balance out their losses and wins. Usually, I personally take 1 a day, but I'm prepared to wait a longer period of time to see my results. And you will find that in day trading, you're going to find the most amount of strategies. Literally, you will. There is so much opportunity as a day trader, and there are so many strategies out there that work. What you have to be doing is finding the strategy that's going to work for you. If you don't, and you're trying to use something that everybody else is using because it's working for them, but it don't fit your personality and characteristics, you're going to find you're going to struggle immensely. So make sure you take some time to figure out what works for you and what doesn't. So what is the best time for a day trader? Well, let's find out a little bit more about them. Now, we know as a day trader that there is tons and tons of money to be made. Just like swing trading, but it just takes a longer period of time. Day trading, you're looking to manipulate the market for that period of time within 24 hours. You have 5 days as a Forex trader to take advantage of the markets and tradable opportunities. Now, with day trading, patterns repeat themselves very, very regularly across all instruments, simply because the strategy and techniques that the day trader uses are designed to take advantage of the moves within that 24 hours. Now, you don't have the stress of having to hold trades overnight, worrying about swaps, spreads, and whatever else that you may be worried about. You're looking just to get in and out, and literally that's all you're looking to do. And you're looking to trade on intraday time frame. So just touching back on what I just said, you're just looking to take advantage of the move within that period of time. So that being said, what is the best time for a day trader to trade? Well, as I said, I use the 4H time frame. That to me is the best time frame for an intraday or day trader to use. Personally, I don't think that there's any other time frame better than that. I'm a market structure trader, so I don't trade support and resistance or trend lines or any sort of patterns that are common to everybody else. I'm just looking for the market to identify to me strong momentum. Once I get that momentum, I'm looking to manipulate that move using lower time frame entries. So 4H to me is super, super powerful. At the close of that 4H, to see what price action is doing, to see if we're going to have any continuations from that momentum move. At the close of the 1H is also super good, because you're looking for rejections at key levels in the market to see if you see any bearish or bullish pressure. Also at the close of the 30-minute candle. Now, this is also going to vary on whether you have time to be looking at your charts every 30 minutes or whether you're somebody that needs to look at every 4 hours. And finally, at the close of the 15-minute and 5-minute candles. When I say 15-minute and 5-minute candles, I would tie that in with your 1 hour time frame. So I wouldn't be looking to enter halfway through an hourly move. If you're taking a trade at the close of a 15-minute candle, it's always going to be at the start of the 1 hour candle. So just bear that in mind. And the same for the 5 minutes. You're only looking to enter the 5-minute time frame at the close of the first 5-minute hourly candle or at the open of the next 30-minute candle. The whole point in us doing that is to make sure that we take advantage of the momentum in a single candle so that we can have the opportunity to get to break even as soon as possible. So if we're taking the first 15 minutes of the hourly candle, we have enough range to take advantage of that hourly candle. If we plan to take the trade on a 5-minute time frame, we want to make sure it's at the start of the first hourly candle or at the start, second 30-minute candle of that hourly candle, so that you take advantage of that move that 30-minute candle can do. Finally, scalpers. Now, this is my least favorite trading strategy, to be honest with you, or trading approach. Scalpers tend to be in the markets for a very short period of time, looking to literally take advantage of about 10 to 15 pip moves. They're looking to find key levels on the market where they see reactions from, looking for price to give them evidence of that, and literally looking to enter the market as soon as possible and get out as soon as possible. The problem I find with scalping that didn't fit well with me was the fact that it almost felt like a gamble every time I took a trade. So that's why I switched over to intraday. I feel I have more control of my emotions and psyche, and I feel that it's just best suits me. Anybody else that's scalper out there that disagrees, that's completely fine. No offense. I'm just saying scalping to me is my least favorite approach to the market. I just didn't like the feel of gambling that it gave me. Usually with a scalper, it is a very good way to build a small account because you can take advantage of leverage, increase your lot sizes massively using your lower time frames for entries. But at the same time, it just made 0 sense with the fluctuations that you see on the lower time frames. But that's an overall gist of a scalper. If I missed anything out, again, as I say, nothing against any scalpers out there, just personally to me, it just didn't fit well. Best time for scalpers, well, let's figure out a bit more about them. They take a lot more risks than we do. Generally, they're taking about 3, 5, 6, up to 10 trades a day, if not more, some of them. They're looking to balance out their loss-win ratio. What they also need as a scalper is to make sure that the market moves enough to cover their spread or their commissions. Because technically, if they open a position, the market moves 5 pips, that's only going to cover their commission or at least their spread. And then the next 5 pip moves is technically only going to be giving them their profit. So any scalper that you see telling you that they've made X amount in 10 pip move, really and truly, they probably have only gained about 3 to 5 pips, if not just a little bit more from that move itself. So you're only looking to be taken advantage of a small amount. Your risk in itself is always going to be greater unless you're able to scale your stop loss extremely small, which would require you to use a lot lower time frames to get those entries. Just bear that in mind. Your risk-reward ratio is always going to be slightly off because of the spreads and commissions that you have to pay first before then you move on to your profits. Generally, a scalper will need a bigger account. You can, as I said, grow a small account as a scalper because you can use leverage to your advantage, but it's just a big risk that you're planning to take. If you're planning to take it, by all means go for it, but in terms of longevity in this business, I don't think it's going to work for the majority. And for the simple fact that you need to take more trades on a daily basis can cause a lot of anxiety, a lot of stress, a lot of emotional distraught, and to me personally, I just don't think that the balance that a scalper provides, or the actual approaches a scalper provides, is worth all of that madness, as I will call it. So what time frames do they generally trade? Well, again, for those scalpers out there that don't trade these time frames, I do apologize, but no offense taken. More often than not, you want to be using your 1 minute time frame to get some super tight entries, get that stop loss as small as you can so you can target some bigger moves. Even if it's just a scalp on the 1 minute time frame, you still need to make sure you're covering your commissions and spreads. 1 minute time frame is good because you can get in and out very quickly. You don't have to sit around in your trade for a long period of time. They go to 5 minute time frames, probably looking for fluctuations in the market, structures like higher lows, lower highs, double tops, double bottoms. Maybe they're going to use a higher time frame like the hourly. As an overview, scalpers are very aggressive. They use a lot lower time frames, and you need to be on the charts longer. So if that's what you want to do, then this is how I see scalpers' entries and the best times to trade. So you'll be looking for 15-minute candle closes, potentially going to be looking for 1 minute candle closes, 5 minute candle closes, and to enter your trades. Best time to trade? Well, the answer to your question is when there's an opportunity. So some things that you really need to think about is your mental. As a trader, I personally believe trading is 95% mental. You have to really ask yourself, when I'm trading, am I feeling anxious? Do I feel like I'm forcing trades? Do I feel that there's pressure before I take the trade? Does it fit my lifestyle? If you are feeling that your life, your mental, your emotions are being affected because of trading, then you need to take a step back and reevaluate things. Maybe the style of strategy that you're using is not fitting your lifestyle. Maybe the strategy itself that you're using is, but you're not finding the time to trade it. Maybe you need to switch it up. Think about these things as you move forward, because your growth is largely dependent on your emotions and your psychology, and being able to maintain a strong mind, because that is what is required to be a consistent and profitable trader, or definitely one of the key traits that you're going to need. So as I mentioned, the best times to trade is when you have time to trade. Understand that this is not a race. Yes, everybody wants to win now, but guess what? It's not going to happen. If it hasn't happened for everybody else, it's not going to happen for you. You have to understand you have to take time in this business. You may hear me say it all the time, but in Forex, it's about the last man standing. And literally, if you can't withstand being in the Forex market for 6 months, a year, 2 or 3, then this really isn't for you. There are much easier careers to follow or pursue than Forex. And you don't want to be stressed. You come into Forex because you want to supplement your lifestyle, potentially want to leave your job, become a full-time trader. So if you're bringing more stress to your life because you're looking for the best time to trade or the best sessions to trade or the best patterns to trade, then guess what? It's not worth it. It really isn't. Think about everything I said. There is no perfect time to trade. Trade when you can. Make sure that it fits your lifestyle, your working lifestyle, your family lifestyle, your leisure lifestyle, whatever it is that you're living or the life you're living. Make sure that you trade when there's a tradable opportunity, when you have time to trade. That will alleviate so much stress and anxiety from your life, and you will feel a weight off of your shoulders. So I hope that was a little insight into my thoughts. Again, nobody has to agree with me, but if you do or you don't, pop a comment down below. I would really appreciate it. And as I always ask, if you'd like the video, please give us a thumbs up, turn on notifications and subscribe. Till next time, take care and bye-bye.